Midweek has arrived and we still have lots to tell you. You're watching Power Breakfast here on CNBC TV 18. I am Hormis Patakia. With me as always is Vamakshi Dhoria. Vamakshi, good morning. We are digesting a very strong handover from Wall Street, but it was pretty much in the price considering Monday was a holiday over there. And the bulls would be looking to defend lower levels after the Sensex expiry is out of the way.
Well, absolutely, Hormis. You can't rule out any sort of volatility given that this is the monthly expiry week. And of course, we have lots of earnings lined up today. So let's also watch out for that. But, let's get started with the top headlines then. US markets ended sharply higher to begin the holiday truncated week with all three major indices up 1.5% to 2.5% as EU tariff delay lifted the sentiment across the street.
Asian markets were rallying in early trade this morning, mirroring the moves on Wall Street. The Nikkei is up over 1%. The Kospi is also trading with gains. The GIFT Nifty is also indicating a slightly subdued start, though, for our own markets.
Oil prices ease as US-Iran talks. OPEC Plus plans spur supply concerns while Trump's tariff reprieve pushes gold down another 1% for the second straight session.
The spate of block deals continue on Dalal Street. ITC's largest shareholder, British American Tobacco, is set to dilute 2.3% stake worth close to 11,500 crore rupees. BAT will hold a 23.1% stake in the company post today's transaction. As we mentioned, it was a pretty strong handover from Wall Street, not just because of the tariff delay, but also because of the fact that there was a fall in the bond yields overnight, and that supported sentiments across the street. And it's rubbing off on the Asian screen as well. Most of the Asian markets are trading above the flat line and with healthy gains as well. The Hang Seng, though, is a bit of an outlier, still remaining flat. The Taiwanese index is up 0.8%. The Nikkei is up around 0.7%, slightly off the highs of the day, but still holding on to gains. The Kospi, though, is now trading with gains of 2% in South Korea. So healthy gains coming in there from the Kospi. And the Shanghai Composite 2 is trading around the flat line. So mainland China and the Hang Seng, they are currently in a bit of a subdued environment right now, but gains coming in from Japan and from South Korea across the Asia Pacific. Pull up the GIFT Nifty as well. That will give you an idea of how our own markets are likely to start off. Well, almost at same levels as we ended yesterday's trade. So some expiry related volatility may be in play and might see some support at lower levels as well for our own markets. But Vamakshi, it was a very, very strong session for Wall Street. They came back after a holiday yesterday.
Well, absolutely, Hormas. It is a very good handover that is coming in from Wall Street. In the US market, Wall Street ended Tuesday's trading session sharply higher. The Dow added 740 points while the S&P 500 closed 2% higher. The tech-heavy Nasdaq was the outperformer, gaining 460 points at close. CNBC's Steve Kovac gets us a wrap of all the action on Wall Street. Listen in.
U.S. markets were up sharply across the major indexes in Tuesday's trading after President Trump over the weekend agreed to delay until July those 50% tariffs on the European Union. The Dow added 741 points, the S&P 500 was up 119 points, and the tech-heavy Nasdaq up 2.5%, gaining 462 points. Also helping to power the markets on Tuesday, consumer confidence data came in much stronger than economists predicted. That's according to the Conference Board's monthly index, which said much of the positive sentiment came from hopes of a trade deal between the United States and China. President Trump lowered the most severe tariffs against China on May 12th. May's rebound followed 5 straight months of declines. And Disney's remake of Lilo & Stitch helped power a record-breaking weekend at the box office, bringing in an estimated $183 million in North American ticket sales. Paramount's Mission Impossible: The Final Reckoning came in second with $77.5 million. The total domestic haul of $327 million set a record for the Memorial Day holiday weekend, according to ComScore. That's what's happening here in the U.S. Back to you, Mumbai.
Steve Kovac, thanks a lot for that update. And staying with Wall Street then, as hopes of a trade agreement are rising, Kevin Hassett, the director of the National Economic Council, has said that he expects to see a few more trade deals this week. Listen in.
But in Europe, they got all these countries, and each country has a different objective. and they have to aggregate these objectives at the EU. And so while we've been not making the progress we wanted to see, you can sort of understand that they've got a problem where they can't make up their own minds. And so I think having a little bit of a deep breath and waiting for them to figure out what they want, then that should help the negotiations. But the bottom line is, across all the countries, I expect we'll probably see a few more deals even this week. There's some stuff very close to finished, and it's up to the president, of course. But in the end, the other thing I would say is that you should expect the best out of these deals. President Trump wants to put America first. He understands that our trading partners want to put themselves first, and he wants them to be second in our affections and America first, and the things are moving forward very quickly.
Well, the NEC director also spoke about how close the U.S. was to reaching a trade deal with India. Listen in.
You know, I won't talk about a specific country, but I have been meeting with Indian officials. I had dinner with the ambassador a little while ago, and I think, and JD went over there and made a huge amount of progress. Thank goodness for the vice president. So yeah, I would say that it's one of the ones that's on the list of it's close to the finish line.
Let us also now listen to former Cleveland Fed president giving her views on the tariff impact for the U.S. economy.
Eventually, we're going to feel the tariffs in the U.S. economy, both in terms of price levels and in terms of weakening growth. And you're correct in that we haven't really seen it in the hard data yet. When you talk to businesses and you look at some of the survey data, that and sentiment data, that's where you're seeing it. So again, I think it's too early now to have seen it in some of the hard data, which is backward looking, but eventually we'll see it. Now, how large the effects will be, that's still not determined because we don't really know where the thing is going to land. As you had on Kevin Hassett talking about some of the deals, we have to sort of wait until we see what really is going to be the ultimate tariff landscape. And so that's why it feels like everyone's waiting with bated breath to see what's going to come out.
Well, consumer confidence for the month of May came in much stronger than expected. Let's listen in to Michael Feroli of JP Morgan on why he believes this happened.
Well, we did revise up after the truce in the talks with China. And that may be a little bit of what you're capturing in this latest consumer confidence number, coming off a very low level, but apparently some of the survey respondents came after that truce was announced. So I think maybe some common factors here driving a forecast toward a little less pessimism than we had right after Liberation Day.
Well, European stocks also closed broadly higher in Tuesday's trading session. The DAX also touched new records, adding nearly 200 points at the close of trade. The CAC was a bit of an outlier, ending at the flat line, while the FTSE in the UK also ending with gains of around 0.7%. So a largely positive handover coming in from the European markets as well. But with all of that global market action, how are things positioned for our own markets? Our research team is joining in with the trade setup, the stocks that are likely to be in the news, and of course the setup on the F&O side of things as well. Vinny first up joins in to get us all the market cues we need to watch out for. Vinny, good morning. GIFT Nifty pointing towards a subdued start, but what are the cues we need to keep in mind today?
Absolutely, a subdued start maybe is what we are watching out for, given that yesterday also the market closed near the day's lowest point. Sensex was down 625 points, Nifty was down 175 points as well, and mid-cap though, we saw that outperformance coming in there. FIIs, they continue to be buyers, 348 crores as FII buy, while domestic buyers were always around 10,000 crores in terms of buy. Yesterday a lot of block deals were also there, so that impact also comes in terms of these numbers of FIIs as well as DIIs. But overall, what we're watching out for in terms of cues, we saw a rebound that came in the US consumer confidence data as well, which you all highlighted a short while ago. Earnings also we are watching out for. Cummins is reporting its numbers, IRCTC as well as SAIL. And industrial production data on the domestic front will be key to watch out for. There's going to be the FOMC meeting minutes also, which will be coming out. So that is also what we're keeping an eye out on. Though right now, in terms of the handover that we had from the US market is positive, Nifty implied open, indicating a muted start for the Indian markets.
Indeed, a muted start for our own markets, almost at similar levels as to where we ended yesterday. But that does not mean that there's not going to be any stock-specific activity. And Vamakshi is here to highlight all of those stocks, Vamakshi.
Well, Hormaz, let me first start off with a few earnings reactions. Then Bharat Dynamics will be in focus today. Strong revenue growth of almost 41% is what the company has reported in FY25. This is well above the guidance of 20 to 25%, but profitability has taken a big hit. FY25 margins declined by almost 850 basis points year on year to 14%. This is much below the stated guidance of almost 20%. In the fourth quarter itself, the margins dipped sharply from 37% to around 17%. The order book, however, is strong at 22,700 odd crores. LIC, on the other hand, reported a good set of numbers. New business premium came in at 70,000 odd crores. This is above what the street was anticipating. Total APE as well at 18,850 odd crores came in above expectations. The VNB margin, though, at 18.75% came in slightly below what the street was anticipating. NMDC's revenue saw an uptick of 8%. This has come in above what the street was expecting. The margins have contracted to 29.3%, and this is slightly below what the street was expecting, and the net profit is a miss as far as the street's expectations are concerned. Hindustan Copper's revenue saw an uptick of almost 29%. Margins have declined to 36.5%, but the net profit has seen a very strong growth of almost 51%. EID Paddy's revenue saw an uptick of 22%. The margins have contracted by 7.8%, and the net profit is seeing a very strong uptick of almost 30%. And lastly, keeping an eye out on ITC as well, because British American Tobacco is likely to sell 2.3% stake in the company at a base price of 400 rupees per share. But moving on then, we now have Mangalam, who is joining in with cues from the F&O space. Good morning, Mangalam.
Good morning. So if you look at the markets yesterday, they were selling, but it was at the end of the day consolidating for the frontline indices. The broader markets doing slightly better. And what was interesting about yesterday and day before's trading session is yesterday's the lows were bought and day before trading session, the highs were sold. And all in all, the market has been respecting the range. If you look at it, on May 27th, the low on the Nifty was 24,704. On May 26th, the high was 25,079. What have we been talking about? Nifty is support between 24,650 to 24,700 and supply between 25,50 to 25,100. And that's exactly what where the Nifty was. For the Nifty Bank as well, we've been talking about 55,000 to 56,000 as a range. And that's what yesterday's low and day before yesterday's high indicate. The India VIX has been rallying, so that tells you that volatility, despite the market consolidating, is still on. Yesterday's cash market flows data will not tell you the picture of the overall market because it was skewed by a couple of large trades. So DI has bought 10,000 crores, the FI has 348 crores. Large trades were Interglobe Aviation and PG Electroplast. However, the FI sold big in index futures. After 3 trading sessions of buying, they sold about 3,000 crores in index futures, where they added 14,000 short contracts. So it wasn't as much of long unwinding as it was of short addition, and most of those shorts were attributed towards the Nifty itself. 2,700 crore worth, the 2,900 crore selling was towards Nifty futures. It could be on account of the next month series because this is the expiry week, so perhaps it's on account of rollover, so we'll keep an eye out on that. But nevertheless, if the market holds on to lows and highs, we may see some of these positions being unwound because we have rollovers at 60% so far, and the FI longs have dropped to 31%. The other thing that may support the market right now is the put-call ratio, which has now moved to the lower end of the range at 0.82. 24,800 call and 25,000 calls extremely active. 24,800 put equally active as well. Watching out for a bunch of stocks today. We have Chambal Fertilizers, Hindustan Copper, Manappuram and Titagarh, all of them coming out of F&O ban. RBL Bank is the one that still stays in F&O ban. Broad point for the Nifty, 24,650 to 25,100.
Well, thank you so much for those insights, Mangalam. But let's slip into a short break. Up next, we get you more news and updates on the other side, so don't go anywhere. Welcome back. You're watching Power Breakfast on CNBC TV 18. Now getting you some policy updates. The Reserve Bank of India has tightened the default loss guarantee rule. Sources tell CNBC TV 18 that the RBI has instructed NBFCs to exclude default loss guarantees from fintech firms when provisioning for stressed loans. Ritu is here with more details. Ritu?
Well, that's right. Our sources indicate that the Reserve Bank of India wrote to select NBFCs in March, directing them to exclude default loss guarantees provided by fintechs when making loan loss provisions. Simply put, the DLG or the default loss guarantee is a kind of safety net in digital lending where if a borrower does not repay the loan, the fintech or the digital lender promises to cover a part of the loss, which as per RBI rules is capped at 5%. Now, earlier, some NBFCs would simply exclude this 5% DLG amount, which theoretically is available as liquid cash from their loan loss provisioning, but now RBI has prohibited that. And now these lenders worry that this will make DLG model less attractive and more immediately also cause them to incur a hit in order to make this additional provisioning on their loans. Now, our sources indicate that the industry, including NBFCs, fintechs, through their SROs like FACE, have been in talks with RBI over this issue over the last couple of months. Now, while the directive first came from the Department of Supervision following their audits, the matter has now been taken up at RBI's Department of Regulation by the industry. Essentially, they want RBI to consider allowing NBFCs to set off the DLG amount against provision, arguing that even Ind AS accounting standards allow for setting off this DLG against provisions provided the NBFCs have clear access to cash flow through an escrow account maintained with a bank. But if the RBI directions are implemented as such, it will imply a higher capital consumption for these lenders, which will eventually hamper ROEs and could lead to lower volumes when it comes to fintech lending. Now, we understand that even as the dialogue with RBI is ongoing, some NBFCs have started to make provisions from the March quarter onwards. Paytm, for instance, started DLG in the last financial year, and as per Macquarie, about 80% of their merchant loans are under this DLG arrangement, so there could be a decline in distribution revenues for the likes of Paytm.
Ritu, thanks a lot for that. Now, the private sector's contribution to investments made for the creation of new assets has dipped to the lowest level in 11 years. Now, data from FY24 shows that the government share of the pie has been inching higher, while the household sector share has been broadly stable. Now, Sapna Das is here to break down that data for us. Sapna.
India's private sector investment appears to have lost some steam. According to the Ministry of Statistics, the contribution of private non-financial corporations in gross fixed capital formation, or GFCF, which are basically investments for creating assets and can be seen by the green line, declined to 32.4% in FY24, which is a 300 basis points drop year on year and an 800 basis points drop since FY16, when the share of private investments had peaked at slightly over 40%. Perhaps more significantly, it is also the lowest level in 11 years since FY13, when the private sector share was over 34%. So while private sector momentum has weakened, the government has been stepping up. The centre and state share in capital formation depicted by the red line was over 13% in FY24, almost 200 basis points higher year on year. It is also an improvement from FY13, when their share was just over 10%. The rise in government investment is further reinforced by public sector enterprises. Public non-financial corporations' contribution in capital formation, depicted by the yellow line, was at 11.8% in FY24, over 200 basis points higher than FY23. This is also above the FY13 level of 10.5% and probably in line with the government's push to public sector-led capital expenditure. Contribution by the household sector, meanwhile, remains broadly stable and is depicted by the green line. In FY24, households accounted for 41.7% of the gross fixed capital formation, lower than FY23. The sector is also off its high of a 43.7% share in FY13, as private investments took some of that space in the earlier years, as is depicted in the bar graphs, in the line graphs. But, however, households still continue to dominate as the largest contributor in capital formation, with a consistent share of over 41% at least in the last 3 years. To sum up, government data is probably signalling a change in investment landscape, with private sector's share investments retreating to a decade low, while government and public sector units are stepping up and households maintain their dominant, though slightly tapering share. As India navigates its investment-led growth narrative, these shifts are crucial to understand the drivers of capital formation and the implications for long-term growth.
Well, thank you so much for those insights, Sapna. But let's slip into a very short break. Up next, we get you cues from the commodities market. Don't go anywhere.
Welcome back. Now, in more news coming in from the US, the Trump administration has ordered its missions to abroad to stop scheduling new appointments for student and exchange visitor visa applicants. Now, this comes as the State Department prepares to expand the process of going through the applicants' social media activities and then weigh in on whether the student should be allowed to study in US universities. The Trump administration has also cautioned Indian students studying in the United States against skipping classes or dropping out of their program without informing their respective schools. The US Embassy in India, in an advisory post on X, said that the visas of students who respond to such actions could be revoked and they may be rendered ineligible for further visas. Now, Indians account for close to 30% of the international student community in the United States. And Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. Gold is seeing a bit of a floor at lower levels, but the crude oil prices remain in the range.
Well, yes, and I'll start with the crude oil prices because, this is where the major action will happen over the weekend. You have the OPEC ministerial online meeting that's happening on 28th of May, that's today. And then the 8 OPEC members will meet on 31st of May yet again to talk about production going forward. So this is going to be quite volatile going forward. In the meanwhile, Iran has hiked prices for the Asian buyers. Markets also are looking at potential new sanctions on Russia, and U.S. has been making those statements for some time now. And the U.S. also has barred Chevron from exporting Venezuela crude. So Chevron can continue its operations in Venezuela but cannot export that crude. So that is something that's coming as a bit of a concern for Chevron there. So more developing clearly a story coming in from there. But in the meanwhile, yes, you have seen the gold prices, silver, platinum, all of that decline overnight. And this is after 5% of gains that the gold prices saw in the previous week. The risk sentiment seems to be improving. You have regional equities doing well. The dollar index has seen a bit of a rebound. And then the markets will watch out for the Fed's latest policy meeting minutes that come in today. And for the rest of this week, it's going to be about the first quarter GDP numbers from U.S., the weekly unemployment claims, PCE data. So the rest of the week clearly quite volatile.
Well, thank you so much for that, Manisha. So crude doing well while gold prices decline. But that's all we have on this edition of Power Breakfast. Don't go anywhere because Bazaar Morning Call comes up next.